So you guys might like the song called the mariachi, but my favorite type of song is called the Fibonacci. It's so Gucci, according to Mr. Fibonacci. Once mastered, it's so Versace. You can chop down the charts like karate. Some people even say it's like the Illuminati. Now sit back and have that coffee, relax that body, enjoy that Harvati. By the time we're done, it'll be so naughty. You'll be like an engineer in Star Trek screaming, "Oh, Scotty!" Okay, so I'm not going to get into the actual sequence of the numbers in terms of the mathematics behind it, but what I will get into is how to use it, and that's the most important thing. Just think of the Fibonacci sequence as a sequence of numbers that's dictated in everything in life, guys. It is found all around us, and we don't even know. And what's cool about it is it's a sequence of numbers that creates these ratios, and these ratios are a beautiful thing, guys. I mean, you can range from the way architects design buildings, to the way seashells are shaped, to the way our bodies are proportional, to the way our genes are coiled proportionally, like our DNA, the way it's helix, right? Their specific ratio is measured by this Fibonacci sequence as well. And it goes to the way our solar system, right guys, our solar system rotates around the galaxy as well, to the way galaxies are spiraled into shapes. And not only are they found in everything in the universe, but they are also found in charts. And that is a beautiful thing. When I first learned about the Fibonacci sequence in numbers, because I studied mathematics in university for 3 years, it was just mind blowing. Like I spent so many hours just researching about it because it was just such a fascinating set of numbers to me, and how it was found in everything in the universe. And not only that, it's also found in charts. And like the way it's used in charts, it's going to blow your mind, guys. And once you learn about these Fibonacci sequences, or how to use it, it's going to change the way you trade. I trade heavily on it, guys. I'm a Fibonacci trader, okay? I use Elliott wave theory as my main way of trading, and Elliott wave is all based on Fibonacci and how they retrace. So we're going to get into Fibonacci right away, guys. Let's get into it, okay? So for those that don't know where the tool is right here, okay? There's a little pull-out tab on TradingView or Bitfinex. It's found differently on Bitfinex. So it's called Fibonacci. There's the first one we'll be talking about, and the second one will be Fibonacci trend-based extension. So one is called Fibonacci retracement, and the other one is called Fibonacci extensions. And we're going to go over both of them in a lot of detail. Now, I actually just hotkeyed it. If you guys don't know, you can actually click on this menu, and you can star each one to use your favorite tools. Like for example, mine, I have a square, I've got a Elliott wave, I got ABC, I got text, I got lines, I got date, and then I have my long, short, Fibonacci retracement, trend-based, triangles, and also date range. So those are some of my favorite tools that I use, which I have all here already. So how do we use it, okay? How do we use it? Let's just draw some basic lines first of all. This is probably going to be the easiest way to draw it. So for Elliott wave, as you guys might have seen me talk about a lot before, every wave up for a motive wave will have 5 zigzags, right? So what Fibonacci does is it gives you an idea of how much it can retrace back, okay? So we're going to talk about just this one right here. So you guys always see the top of somewhere, right? And what Fibonacci does is it gives you an idea of how far down it can go. And it tells you the market sentiment in general, or sorry, the coin sentiment of that specific coin. So if it was very bullish, it would not come down far. And if it was very bullish, or sorry, if it was not bullish, it would go down further. And if it was very bullish, it would not come down as much. So just to give you guys an idea, let's just say that this is a line representing a wave upwards, okay? So if it fell down to the middle, exactly the middle, what percentage did it fall down? It fell down 50%, right? Well, if it fell down a quarter only, say this is a quarter right here, what percentage did it fall down? That means that it came down 25%, right? What about if it came down 75%? I answered it. I was just testing you guys. I was just making sure that you're all following. Okay, if it came down 3/4, then that means that it would come down 75%, right? So let's just give you guys an example of Fibonacci. So what you first do is you click on your Fibonacci tool, the Fibonacci retracement tool, okay? And you always start it from where it began. So if you're going upwards, then you're going to click on the first point right here, and then you're going to click on the second point right there. Now, I would also like to show you a different way of doing it as well. You don't always have to click on that first point, as long as it's on the same y-axis, okay? So if it starts right here, see how my mouse is hovering there? You can actually start it here if you want, just so you can clear up some stuff on the screen. As long as on the y-axis, or the horizontal axis is what I'm talking about, is on the same line. And here, you don't have to click right there. You can do it anywhere right here, as long as the range is the same, right? As long as the range is the same from the top to the bottom. And you can drag it, right? You can drag it, and you notice it's all staying the same there. So what you would want to do for an impulse move up is you would want to draw your Fibonacci numbers. Now I'm just going to get all my numbers back onto here. So I only keep a specific amount on here because we're in a fairly bullish market. So what I do is I keep mine on a few numbers. I'm actually going to get more numbers in here as well. So I keep my range from basically 0, 2, 3, 6, 3, 8, 2, 5, 6, 1, 8, 7, 8, 6, and 1. So what this basically means, I hope you guys can see this. Is this too small? Okay, that's probably better, right? That's a lot better. There we go. Okay, so these numbers, if you see them, notice how this says 2, 3, 6. This says 3, 8, 2. Let's see if I can get the text bigger for you guys. No, I can't get the text bigger. That sucks. Sorry guys, I hope you guys can see this on full screen. Okay, so what these numbers represent is a ratio of the Fibonacci sequence, which is a set of numbers, and the set of numbers are divided to create a specific set of ratios, right? And the big ratio is this guy right here. This is the magical number, guys, 618. This is called the golden ratio. So this golden ratio, it's a common mathematical ratio. It's found in nature. It's used to create very pleasing, natural-looking compositions in design work, and we call it the golden ratio. It's also known as other things like golden mean, golden section, etc. And the golden ratio is it's just a sequence of numbers where you take a number and you divide it by another number and you get it, right? And that's how all of these numbers are derived. And I won't really get into that, but what I will tell you that 618 is the most magical ratio in the universe. It is found in everything, as I mentioned before, and I'm going to explain exactly how we interpret it from beginning to end, okay? So let's drag out our Fibonacci just like this. I'll do it over here so you guys can see it better. There we go. That's a lot better. So let's say that it came down to 236. Do you guys know what that means? So this 236, just think of it as 23.6%. So if it came down to this line right there, then that means that it came down 23.6% of the beginning here. Imagine this as a ratio or just as a number, right? This is 100%, okay? 100%. You're giving it 100%. And then if all of a sudden you drop, you're dropping down to this point, you're dropping 23.6%. Now, if you came down even lower, to here, that would be 38.2% where it came down. See the 0.382? Then if it came down here, then that means that it has dropped 50% of the overall move up, right? So it now has moved 50% from the overall move up. Now, if it came down to this number here, which is the golden ratio, that's 61.8%. This number right here is where people start panicking, guys. This is the magical number, okay? I always put in my buy orders between 0.5 and 618 because I anticipate a very, very bullish market that's upcoming in late 2018 all the way to the middle of 2018. And I know for a fact that a lot of people are going to panic the same way. Now, why? That's another question. The more important question, the more important thing to be asking is not so why, but how, right? Like how do people know? And I don't really want to explain all of that, but what I do know is that every time it reaches 6.8, I will always put in my buy orders and I will buy it no matter what, guys. And I'm going to show you so many different examples. Now, if it was a more bearish market, it might move down to 786. If it moved down to 100%, guys, that would move down to a ratio of 1, right? So what this would mean, if it moved down all the way, is that something drastically went wrong. Whether it was fundamentally or there was a big market crash, if it moved down to the 1, that's usually never a good sign. It could imply many things, such as people are pumping, and then all of a sudden they're dumping. It could imply that the market has literally crashed, guys, which is never a good thing, right? So I'm going to explain these three significant numbers to me. This one, and that one right there. The 382. So once again, if it goes down to the 382 level, it means that and then it bounces off of it, then that means that the market is very bullish, right? If it goes to 618, it's not as bullish, but if it does bounce off of it, it still is bullish. If it goes to the 618 level and it bounces right off of there, then that is actually a very powerful number as well. It implies that it's very bullish and people are starting to panic there and they won't let it get lower. So the way I see Fibonacci is I see it as a resistance and I see it as a support. That's what it acts as. Every time we come close to one of these Fibonacci numbers because of nature, it's always going to bounce off of it slightly. If it doesn't bounce off of it, then it'll move down to the lower one. And then it could bounce off of that. And then if it doesn't bounce off of that one, then it's going to go down to the next lower one and bounce off of that. So this one right here, I see it as the magical number, golden ratio. And I always put in my buy orders here just in case it gets there while I'm sleeping or something and I wake up and I see, wow, it literally bounced off of there. Now, let's give you guys some real life scenarios of what is going on and how we can apply it. So a chart that I'm looking at right now is NEO. But first, I should probably go into, since I know a lot of you guys are familiarizing yourselves with Elliott Wave, right? I'm going to show you guys some very specific rules that I use for retracement. Now, one rule that I use is this, okay? So you take your Fibonacci retracement. Every impulse wave has 5 waves up, no matter what. And then it starts a really big correction. And I'm sure some of you guys are familiar with Elliott Wave already. So what we do on the first wave is we take Fibonacci, right? I'm going to draw it again and explain it because I want to be thorough. You take it from the beginning point, click on here, and then you click on the second point, that's the top, right here, okay? Right here. Now we have right here is known as 1, or 100%. And then the top point is known as 0, okay? It's known as 0 because as you come downwards, if it moves to 50%, right? This is a 50% level, it's 50% closer to the original position. If it moved down to 23.6 right here, it means that it's only moving down 23.6% to the original level. If it moves down to 618 level, it means that it's moving down 61.8% to the original level. If it moves 78.6 or 76 there, it means it moves 78.6% to the original level. And then if it moves all the way back down over here, then that means what? It moved back 100% to the original level, which barely happens unless it's a really bad coin. So I'm just checking my Dash. Okay, perfect. Dash is doing good. So this is a set of rules that I follow. A set of rules that I follow is that, first of all, we have 3 motive waves up. We have 1 going up, then we have 3 going up, and we have 5 going up. Excuse me there. And waves 2 and waves 4 are always the corrective waves. Now, the way wave 2 and 4 behave, they're actually dependent on each other. And a lot of people don't know this because it's more advanced, I'd say. But when you apply Elliott Wave into Fibonacci, which it's all about, you get a very good understanding. And the rule goes something like this. If wave 2 retraces a lot, then wave 4 will not. Okay, so I'll give you guys an example. In wave 2, retraces a lot, and wave 4 will not retrace a lot. So the way we do our extension or our retracement is we do it on wave 1, first of all. And these are very important rules to remember. And I kid you not that you won't really hear a lot of people talking about this on YouTube, if ever. I don't think I watched, before I got into this video, I watched almost every single Fibonacci video that I thought was good, okay? And what I did was I took all of their good points, and then the ones that were bad, I also took all of their bad points, and I will not do what they're doing. So I'm going to tell you guys the most precise information that you need to know and how to apply it and how to develop and create a winning strategy over time. And I'm going to show you guys many, many examples in charts. And you guys are going to say, what the heck? How did I not know this before? This is just mind-blowing. So let's get into it, guys. So after our wave 1 completes, we draw our Fibonacci tool here, and we see how much it retraces. So if it retraces, for example, to a 786 level right here, we can automatically assume that wave 4 will not retrace a lot. And then when we take it for individual waves for each of the subwaves, and that's a really important concept to understand, okay? So we take it for only wave 1 here. And then what we do is for our third wave up, for example, we take Fibonacci from the starting of the second wave to where the third wave began, which is right, or ended right there, okay? So that's an important concept. So when we take our Fibonacci from the beginning of wave 1 to wave 2, we notice here as an example that it retraced 786, right? 786. Now, after the formation of wave 3, you guys might be wondering, hey, when is a good point to buy back in? Now, these will act as a support, and it'll eventually reach one of these numbers where it will bounce really hard off of. So the way you would think of it is you would think of it in correlation to your indicators, and you would try to find confluence. So you would first of all look for 236. If it only reached 236, then it's most likely going to bounce really hard off of it and go even higher. Then you'll see if it falls through and breaks right through 236, then you're going to look at the next Fibonacci level, which is 382. If it bounces off of there, great, you're in a trade. If it goes to 50% down, that would be the 0.5 level, right? And the 0.5 level is a really strong one as well. If it bounces off of there, great, you're going up. But what I look for the most is the 618 level right here. This is the magical number where I stack a lot of my buys, and it has not failed me, guys. It has not failed me. I am not kidding you how strong the market is bullishly right now. So we notice here that it retraces 786, right? Now, we will assume after wave 3 finishes, we'll assume, hey, because this one only retraced 786, maybe this one will retrace less. It might retrace to 0.5, it might retrace to 382 only, but it's definitely not going to retrace to 786. And a general rule is that the wave 4 will not retrace into the wave 1 territory. So that's a really strong rule to follow as well. So we know from just these general rules that it might even touch 618, but it's not going to actually go lower than 786 because of 2 rules. One is that if the first wave here, the second wave, corrective wave, if it actually retraces heavily to 786, and 2, then wave 4 will not retrace much at all. And then the other rule is that if it retraces, wave 4 does not retrace into the territory of wave 1. So we know that it'll retrace to here at most or somewhere right here, just as an example. And then after we take, so once again, we take wave 1's Fibonacci only from wave 1. And then we take wave 3's retracement only for wave 3. But, this is the big but that a lot of people may not tell you guys. Once all of these 5 waves complete, right, we actually take Fibonacci. A lot of people make this mistake. They take the Fibonacci retracement of the 5th wave only, and then they say, hey, I'm going to buy back in at the 618 level. And that is so wrong. And I've seen so many people teach it on YouTube like that, and it's the most wrong thing that you can do. It's the most absolute wrong thing, okay? So I'm going to tell you guys the proper way to do it. So once again, we're going to go through it from scratch to make sure you guys completely understand it. Wave 1 Fibonacci, you only take it from there. If it retraces to a low amount, like 786, it will imply that the wave 3 retracement where you take from the beginning of wave 2 to where wave 3 ends. If it retraces heavily, you will assume that it's not going to retrace first rule, it's not going to retrace back to this territory of wave 1. It might only slightly touch it, but not a lot. And then 2 is that if this wave retraces heavily, then this 4th wave right here will not retrace heavily. So it could be anywhere here, it could be there. We'll just draw there for fun. So we know that it could retrace anywhere right here about up to this specific zone. And I heavily base my trades on this, and I've been incredibly successful because these rules just don't fail. Now, once again, the people that make this mistake, they take it from here to here for wave 5 only. So they take the entire 5th wave only, and they're like, okay, I'm going to buy in at 42.6. But that's not the way you do it, guys. The way you do it is actually, once all 5 waves complete, you have to take it from the beginning. You take it from the beginning of the first wave all the way to the end of the top wave. Because what this actually makes is one entire big wave. One entire big wave. And then now, these are small retracements for each individual subwave, but after the one big wave completes, it makes one huge retracement, guys. One huge retracement, right? And that could fall anywhere down to over here. So once again, we take our 5th, after all these waves complete, we take Fibonacci from the beginning of where wave 1 started all the way to where it completely ended. Now let's get into some examples. You guys are probably dying to see examples. So let's see where the lowest point is on this map, or not map, chart. So this would be the lowest point right here, right? The lowest point. So this is where the first wave started. Now the second point that I see that's most relevant is here. And the next point would be around here. And then the third point would be around here. 4th point around here, and the 5th point around there. So with that in mind, we can actually draw our Elliott waves. So take our first point there. Let's just say this is our second point. This is our third point. This is our fourth point, fifth point, and there you go. You'll see them a lot better on a different time frame. Let's make sure that they're on point right here. Okay, so now let's look at this substructure right here, okay? So let's say you concluded that that's the top, it's coming down. And now you're wondering, hey, when is a really good spot to buy back in? That's what we're gonna figure out. And we're gonna draw our Fibonacci. So take your Fibonacci tool, take it from the lowest point that you see, and then go to the next highest point that you see here. Just like that, guys, okay? And on here, it's not a good time frame. Let's see a different time frame. Sorry, give me a second. Okay, now that it's coming down, take a look at this, guys. Take a look at this. Now that it finished its entire wave up right there, okay? Its entire wave up, and you see it come down. So if it moved to this line right there, see the 236, that means that it's a 236 level. And what you guys will notice is that there's some stalling here already. You guys will notice that it's stalling, right? People are buying because it's reaching a Fibonacci level right here, right? And then what you'll also notice is that it stalled a little bit, and then it moved all the way down to this level where it moved all the way down to this level right here. It stalled a little bit, right? It bounced off of there. See that green candle? And then it shot all the way back down to the 618 level, right? So this acts as a support. And so all of these numbers act as a support and resistance, which is very powerful. So what I would have done, I'm just gonna say I would have, I don't know if I did or didn't, but what I would have done is I would have put a buy order right at the 618 Fibonacci level. And surely enough, it would have filled depending on the size of the order. And then it bounced right off of it, guys. And where did it meet resistance, right? So it moved from here to here. The number that it moved to is 618, which is also known as 61.8% of the entire wave. So if it moved down here, once again, to the 50 mark, that means that it moved down 50%. If it moved down to all the way here, that means that it moved down 100%, right? So the 286, or sorry, 236, that would mean that it's moving down to 23.6. So now that it moved down to the golden number where most people will put their buys, guys, lots of people will put their buy orders in here to go long because that's where they will expect it. It's just unfortunate, not unfortunately, but we are blessed to have this type of sequence and these ratios because it's found everywhere in charts as well. And now what you guys will notice is that it bounced off of 618, it shot through 0.5, right? But it found some resistance and support right there. Would you guys agree? And then it tried to break through back up to the 32.8 level, but look at all this stall. It only shot through a little bit, it couldn't get higher. And then what happened is the big plays happened, right? Then it stalled a little bit right there, as we can see, right? And then, guys, it went down to this magical zone right here. Look at this magical zone, guys, where it just does not want to go any lower. So the 618 level is where people will subconsciously put in a lot of their buy orders. And sometimes it might go a little bit lower, but we're only seeing wicks shot down through it, right? Only wicks shot down. So this whole area was a really strong buy zone for people to go long on it. And look how much support there is at the 618 level, like right there specifically, right? So much support. And then what happened after? Sure, it went down a little bit to the 786 level. Some people definitely took their profit. But what happened after? What happened right after was that it shot right back through to the 618 level, bounced a few times on there, and boom, it shot up, guys. So at the beginning of this first wave right here, this would have been the perfect time, guys, the absolute perfect time to go long. Now that we know exactly where a good buy zone is, and also keep this in mind, okay? We're going to make note that this one retraces to roughly the 786 level. Now, remember my rule. The rule is that if wave 2 retraces down heavily to the 786 level, then what we will automatically assume, now that there's an uptrend, is that the next wave, guys, will not retrace much at all. And these rules, I love them because they stay very, very true. So what I'm automatically going to expect, because this one retraces 786, is that the next wave, when it finishes, which happens to be there, will not retrace a lot. And let's see if it holds true. We take it from the bottom right here, all the way to the top of this wave right there. What do you guys know? It did not retrace much at all. Look at that. Because this one did all the retracing. It heavily retraced, right? This one here doesn't even come close to the 786 level. Now, if this one retraced less, right? Let's say it retraces 786, or sorry, the 382, then this one would actually retrace heavily, way down to even more. But it does not enter the territory of where wave 1 ends. So isn't that a thing of beauty, guys? So what I did for this one to go long, that's when I was making some predictions. I can't remember exactly which ones, but it definitely bounces off of there, right? Not a little bit close there. So because you would know these rules, you'd put in the buy order for somewhere in here, just somewhere maybe between the 236 level and the 382. So that would have been a really good buy area because you knew that this one right here did all the retracing already. So wave 4 will not retrace a lot. Now here's the mistake, guys. Here is the mistake that people make. Now that we have that third wave done, what people will do is this right here. They will take their fib retracement, and then they will take the fifth wave right here, the fifth wave, and they're going to be like, oh no, it's retracing heavily. Oh no, it broke down past the 618 level. Oh no, that's definitely not good at all. But that's how I told you guys earlier that that's how you do it wrong. Okay, guys, you only do your wave extensions from the first wave to find out where wave 2 ends, and then you do your extensions from wave 2 to 3 to see where the fourth wave ends. But how do we do a retracement for the whole wave 1 to 5? We do it like this. So 1, 2, 3, 4, 5. Once all of this is completed, we take our fib retracement and we do it for all 5 waves, okay? This is why a lot of people were panicking, and Neo as well. I even made the mistake of counting the waves. I'm not going to deny that. I definitely made some mistakes counting the waves. So let me show you guys how to do it. So we take it for all of the 5 waves. So if you make these mistakes, they're going to be very, very costly. So what we're going to do is we're going to take Fibonacci for all 5 waves, just like here, and we will see how far it retraces. And we're going to ask ourselves, how far is it going to retrace? And will it hit any type of magical number? Because that's exactly what we want. We want to see what type of supports and resistance it will have. So once we've identified the top, we take it from the bottom of where wave 1 began, and we go to the top to where wave 5 began. And what do you guys notice, huh? Check this out. It almost hit the 618 level. So a lot of people I know that what they would do, a lot of my friends do this as well. They're very successful traders. They'd be stacking their buy orders in this zone, just like that. They'll stack. Actually, they'll probably even target 0.5. They'll target 0.5 like that. So the lower it goes, they're going to bank on the fact that it's a very bullish market, right? And they're going to take advantage of their Fibonacci extensions, or retracement. And what actually happens is actually, I'm not going to get into Fibonacci retracement extension in this particular video, because that's a whole new topic by itself. So what I wanted to do is just give an introduction to Fibonacci retracement. And then in the next video for part 2, that's where I'll start doing the Fibonacci extensions, which is a very, very fun topic as well. Although I don't think I should have all of it in one video because it would take really long. So what I do and what my friends do is we stack buy orders, right? We stack buy orders from here, 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 here. We just stack it and stack it. Now you guys might be wondering, why not just have it in one area, right? Well, we don't want to have it in one area because we don't know where it's going to end up. And regardless of where it ends up, guys, regardless of where it ends up, the good thing about it is that we will have an average price of it. No matter what, we'll end up getting an average price. Sorry, I was gone for a while. I forgot what I was talking about. I think I was talking about stacking these buys, right? So we stack these buys because if people just keep dumping and dumping and dumping, because it's a golden ratio zone, we will know that if people dump to us, we'll eventually get a really good average buy price, right? And that's exactly what happened. I entered mine actually at $35 last night. I got mine filled around 35. I entered it a little bit late, and it was actually a great number. I put it right here, actually. Mine filled right around here, $35 or so. I put it in between the 0.5 and 0.6 Fibonacci level. So let's take a look at some more really good examples. So I'm now looking at IOTA on the daily chart. So once we've identified a Fibonacci, a top and a bottom, we draw our Fibonacci tool from the bottom here to the top over there. I apologize for my dog there. So we go from the bottom to the top right there, and it'll give us a range, right? And the way we look at it is we treat these Fibonacci numbers, these ratios right here that we see on the screen, as supports and resistances. So what we'll notice right here is that 0.5, it didn't really act as a strong support, but the 0.6 one did, right? When it got to this 0.6 level right here, it just shot back to it. So a lot of people, including myself in the beginning days of IOTA, I put an order right there in September, right? And I got really lucky that people filled it, and it just shot right back up in the next day. And then what we see is we see the 382 level right here as a major resistance right here, right? It didn't quite break it, and it just comes back down. It stalled at the 0.5 level a tiny bit, but it shot right back down. And then it hit the 618 level again, and it shot back up. See that? And then the 0.5 level acts as a resistance, and now shot right back down, right through 618 actually, almost a 786 level. So I would imagine a lot of people, because this was a resistance, they would have put a lot big buy orders probably in between here, right? And surely enough, people did based on the volume, but it shot right back up. Right, people would just constantly be putting buy orders right into this area because first of all, we noticed it coming right over here already to near the 786 area, and so what people will assume is that this whole region will actually be a good buy zone. For very long-term holders, would have been a great zone, guys. And for investors out there and for long-term holds, for my long-term holds, I adopt this strategy called hold and forget. Buy it and forget about it, and that's kind of it. And I don't really care about it, what price I buy in. I don't always try to go for the bottom, because for long-term holds, it's okay. You don't want to stress yourself with managing your positions too much, and you just want to buy in a fairly relatively good area with a good position. And my position actually was not there, but I actually bought mine at 0.36. If you guys saw my video on IOTA, right, I bought it. I made a video on November 2nd suggesting that people buy it right around this area. And look at where we are now, guys. We're at 20%, okay? So because it retraced down to the 786 level, we knew right away that this was going to be a strong buy zone area. And every time it went there, you guys have noticed, it just shot right back up every time, right? And it hovers in this type of buy zone right here. It hovers in this buy zone, and eventually it didn't really get any lower. It got to the 786 level a little bit. So think of it as a support and as a resistance, right? So if you guys see right here, it's getting a lot of support at the 618 level, and at the 0.5 level, it actually got a lot of resistance, right? Lots of resistance. Here it shot right through 382, but it came back down and bounced off of the 382 level, right? And now we're almost to where the point began, and that's actually our long-term target over there. So let's look at it in closer detail. Okay, so this is a really good one to me right here. And this one here is a leading first wave that goes up like that. So we know that that's wave one. This is the top of wave one, basically. But a lot of people will look here, first of all, right? A lot of people will look at this area when they first see it. So let's go through it case by case. Let's take the lowest point that we see and the highest point. Now, it might be very subjective to where you start your Fibonacci. I would start it probably right where the 0.5 level began, right here, because that would be officially the beginning of wave one to me. That's where I would start it. Or you can start it from here. You can get a very conservative view of it. See? Whoops. Let's say we started from here. That looks like where the uptrend started, all right? So what you guys will notice is that for this particular one, people, or I should say smart people that know Fibonacci well, what they'll do is they'll stack their buys in between this level. Just trying to get my rate. They'll stack it to 0.5, just like this, and they'll just keep laddering it. Like that. So you'll see a lot of people, guys, after it reaches the top there, they'll buy there and they'll hope that it bounces. And surely enough, the people that did do that, they were very profitable. Look at how much money they probably made from stacking their buys there, right? And then now we get the next uptrend, right? This one right here. I'll just get a bigger screen. The next uptrend is right here. So we'll get our fib retracement again. And take a look at that, guys. See a lot of smart people, what they'll do is they'll take their buys and they'll just stack it, the 0.5, lots of them, just like that, like what I do. And surely enough, it bounced off of it hard, guys. Bounced off of it very hard, right? And it went up, right? Went up really, really nicely. Pretty awesome. Now, this is a more advanced type of strategy. This one right here that I'm about to show you. This one is called the Elliott wave leading first wave, diagonal, okay? Leading first wave. So that Elliott wave count for this particular one just goes 1, 2, 3, 4, and 5. But this actually makes all of the first wave only. Now, after this wave completes, I will take a look at my Fibonacci tool, like that, okay? And I'll get a gauge, and I'll say to myself, okay, well, this one right here, this one right here retraced to 382 barely, in between 236 and 382. So now I know that this is now my first wave. This is now my second wave right here. Now, remember I mentioned before that we have 5 impulse waves up, 1, 2, 3, 4, 5, like that. And if this first wave does not retrace a lot, say it only retraces the 382 level, right? Then we know that the fourth wave will actually retrace a little bit more. It'll retrace more than 382, possibly 0.5 or 618. And then once we're done this one right here, we take the whole retracement of the entire 5 waves. Never ever do it from just the 5th wave, okay? Never ever do that, because you guys are gonna really, really screw yourselves up. And trust me, I used to do a lot, and I just don't want to see you guys make that same type of mistake, all right? Because it can be very, very costly down the road. So now that we know that this is wave 1 and that's 2, this one here is obviously wave 3. Now a lot of you guys might have wrote it from wherever. If you would have stacked the buys right around here, and you would have seen. So this one here, you would have stacked the buys, right? A lot of people would be stacking buys right in here, right there, but it never got to that level, right? And because it never got to that level, you also have to look at indicators to see where the possible reversal is. It doesn't mean it's always going to get to that level, guys. No. It's never always going to get to that level. That's not the case at all. We have to be very, very mindful. So, what I might do is I might just, put a little bit here, just a little bit at the 382 level, like a few percentages, and I'll put a bigger percent here and a bigger and a bigger and a bigger. Eventually, regardless of how far down it goes, I'll be happy with my price overall. So that's, oops. Okay, I'm just going to delete some of this. My apologies. And this will be the last example that I give you guys. So that's now wave 1, that's now wave 2, this is now wave 3. And because we know that this one here retraced to only 382, guess what this one is going to retrace, guys? Much more, right? Look, it didn't retrace that much more, but it definitely retraced more, right? This one was barely between the 236 and 382 level. So a lot of people will also be stacking their buys. They might be stacking a small percentage there, a bigger percentage that keeps getting bigger and bigger and bigger and bigger and bigger. And that's how we do it. And what we do know is that it will never, ever retrace into this territory right there. So that's how we know that's the maximum limit based on the Elliott wave and Fibonacci, right? So a lot of people would be stacking their buys there. Some people get theirs filled. The people down here didn't quite get it filled, right? And then when people see, oh, this is actually a reversal right here, then what happens is they'll buy into the strength and it goes up. So this is a very, very bullish market. And what we can assume, because this is wave 4 right here, and wave 5, see, I'm going to show you guys the mistake, okay, that people make. Right there, people will say, wow, I'm going to put a lot of my buy orders from just only wave 5, just wave 5. Right? But that's not how you do it. Once again, notice how far this one retraced down. It retraced down to quite a bit, right? And I actually expect kind of a deeper retracement right now for these guys, because if we look at the daily chart, it's still severely oversold right now. It's severely, severely oversold. In one day, it moved, geez, it was such a large amount that it moved. One day, guys, it moved 12%, a big, huge candle. So I still expect a retracement. How much? Only time will tell. So you guys notice here, when I took the Fibonacci, people were probably like, okay, let's put a buy order, and that's at the 618 level, right? But that's not the way you do it, right? The way you do it is you take your Fibonacci after all 5 waves complete, and what we can automatically assume, guys, is that because wave 1 barely retraced, only to 382, actually barely 382, this one retraced to only 382, what we're going to automatically assume when we take our Fibonacci retracement is that all of this right here, guys, all of this right here is going to retrace a very small amount as well. And what we notice is it only retraces to a 236 level or 238 level, right? So I think I'm going to do one more example, but I'm going to come back in like 2 hours and finish the video. I'm really hungry. So let's take a look at ETP. So we're going to first of all identify where the first top is. So let's say we only have this structure right here. We identify, hey, that looks like a top right there. So we're going to take our Fibonacci retracement tool from the beginning all the way to the end. And what do we notice? We notice that it didn't really retrace much at all, right? It didn't retrace much at all. And based on that logic, where we have 5 waves like this, 1, 2, 3, 4, and 5, this one here only retraced 382-ish, right? Around there, 382 at most. We will assume that wave 4, the next wave, will actually retrace much more. So this guy here, we're going to assume, hey, it could be 0.5, could be 618, but not lower than the point of this guy right there. So let's just make this assumption right here. Let's see where it takes us. So we see the next wave up. Let's say we missed it, okay? We missed this wave. We're like, ah, shucks. So we identify that this is only the first wave, like this. This is the first wave, right? The second, all of this is like a correction right here. So we can say from the bottom point, just anywhere here, just to the bottom point around here. So now we see, hey, this is another one, but you guys missed that one. So now you want to see, hey, where's a good entry point to get in? Because this one retraced not much, 382. We will assume that this one right here will retrace more. And that's exactly what I did, guys. I sure laddered my buy for this guy. I, put in lots of buys right there, lots of buys, just like that. Awesome amount of buys. This is the ETP call that I made, where it would hit much harder than that, but nevertheless, it went up. It was pretty cool. So people will stack their buys because they knew that this one did not retrace a lot, and the people that got in made a lot of money off of this. There was a lot of money to be made in ETP. So that's how we do it, guys. That's how we do our Fibonacci retracement. Market sentiment around 618 level, stack those buys. The 0.5 to the 618 level to the 786, I always ladder my buys, because if it falls down low, I don't really care if it goes down a little bit lower. I follow my general rules that the third wave, when the fourth one corrects, it does not retrace to that territory right there. And this is where people make a mistake as well, right? Watch this mistake right here that they make. They will be like, hey, this is the fourth wave. Excuse me, I'm going to do it better. This is the fourth wave. We're going to see how much this one, the fifth wave, retraces to. Well, that's really wrong, guys. It's really wrong because you got to go Elliott wave 1, 2, 3, 4, and this is your fifth wave. So what do we do after all 5 waves complete? And you guys can also drag these points, just so you know, right? You can drag it back and forth, left and right. It doesn't have to be right there. As long as it's on the same line on the y-axis, then you're good. That's good, like just like that. There you go. So when I say y-axis, I'm talking about horizontally like that, okay? Just like that. There you go. So now we're going to take it from where this point began right there, and we're going to draw it all the way to the point of where, right here. What I did for this here is, actually, no, I didn't. I'm not in the position yet for this one. I'm still waiting for the breakout. Just so you guys know, if you guys are playing ETP, the breakout is coming. The breakout's coming in like 2 days or something like that. Look how close it's consolidating in there. Like it's coming, guys. It's so coming. I am so ready to go into ETP. I made this call, guys, and I was serious about it. We're talking right here, November 22, tomorrow, before the 23rd. Like, yeah, before the 23rd. So like in a few hours, the breakout is going to happen, I think, for that. Okay, anyways, sorry about that. I get excited. So what a lot of people do, excuse me there, is they'll stack their buys right here, guys. They'll stack their buys from this, from they'll average it out. They'll take a small percentage, and maybe they'll put a small percentage at like 382, et cetera, et cetera. Then it gets bigger percentage, even bigger percentage of your buys, even bigger, and then really big percentages down all the way to the 618. And excuse me, I smoke too much. I gotta stop smoking. So if you guys notice right here at the 618 level, it literally just bounced off of it, guys. It literally bounced off of it right there. And we're never going to see that level again, 335. So the people that got it at 335, you guys must be super, super happy right now, because now it's already at 361 and it's still going right now. And I think we're going to get a pretty big breakout soon. So there you guys have it. I just want to give you guys 3 really good examples of how to use Fibonacci extensions. And the next one will be a part 2 called Fibonacci retracement. So I hope I gave you guys a fairly basic and brief overview. I apologize if there weren't many jokes in here. I think for my tutorial videos, I keep them a little bit more serious because I want to have a more serious environment where people can learn without a lot of jokes cracking, etc.